The gold market has experienced high volatility in the last week. This is how investors should be trading right now, according to Gero, veteran trader, managing director of RBC Wealth Management. George, welcome back to Kitco. It's a pleasure speaking with you today.
Well, thank you for having me. What was really surprising to me were the open interest figures, which I quoted in my morning comment, where all silver and gold options and futures significantly higher open interest as buyers flocked in last week's selling spree, taking advantage of lower prices.
Okay. Why do you think they were doing that? Covering their shorts from last week?
I don't think that they were short. I think they had been sellers. There were sellers from some central banks like Uzbekistan, Turkey, all kinds of problematic areas that needed dollars. And of course, when you sell gold, you're buying dollars.
We saw a huge drop in gold price last Monday on the news that Pfizer announced a vaccine that was 90% effective. Was that sale mostly from retail investors or institutional investors or banks?
I think the institutional investors had to sell because they needed cash, because anytime the hedge funds and the commodity funds have other assets that sell off, they tend to sell gold, which is the most liquid in the long run, even though it's more volatile.
So going ahead this week, what are some of the major indicators you're looking at that could tell you whether gold's moving up or down?
Number one, of course, is pandemics headlines. Number two, the possibility of stimulus talks regaining some stature. But more importantly, the benign status of all the central banks, including Chair Powell this week, who seemed to be very cautious but dovish. And being dovish is good for gold.
Do you think Jerome Powell would change his stance at all in 2021, given that we have most likely a new administration in the White House, given that the pandemic is still here with us, but a vaccine may be on its way, and given that the economy, according to some economists, is on its way to recovery? Do you think that he would raise interest rates?
I doubt it very much. I doubt if they can raise rates for the foreseeable short term. I think that the stimulus is still needed, and I think raising rates is not on the agenda at the time when you see world rates getting lower and lower. And we have more worries than we've ever had before. We've had worries that are economic with the pandemics. We have worries that are related to Brexit, where tons of assets are moving out of London.
Looking ahead at short-term volatility, George, how are you positioned for the next couple of weeks? Are you neutral? Are you net long? Are you net short? How are you playing this market?
Well, I haven't personally traded gold in a while. I am long various gold and I think I'm remaining gold, and I have been advocating about a 10% portfolio asset allocation to gold. Gold is a misunderstood asset by many who think it's more of a trading vehicle against stock volatility.
So stock volatility, we've seen a lot of that this week. Different sectors have diverged in their performances. We've seen tech companies fallen and the Dow Jones risen on the Pfizer vaccine news. Where do you see volatility headed in the next few weeks?
Oh, I think we're going to see more volatility post-election. And I think we're going to see more volatility because it's the nature of this market to try and forward look. And probably many of the data that we see is looking behind and not forward. And so the guessing game will continue, and gold will continue to have big ups and downs on its way up eventually towards 2000.
So let's suppose we have a vaccine, and let's suppose that the pandemic is subsiding. next year. Do you think gold could suffer as a result?
Not necessarily. I think we're going to see more debts, more stimulus. We're going to see more inflation. We're already seeing inflation. People who say there's no inflation haven't been to a supermarket.
All right. What would you say to a first-time gold trader who's just entering the space and is not fully aware of all the drivers of gold? What are some of the most important economic or maybe political indicators that they should be watching that the average layman, retail investor, could be following, George?
Well, they should be following interest rates, they should be following currencies, and they should be following political headlines.
Interest rates are low right now. You think they'll stay low? Political headlines, we've got the elections. What else is driving political headlines? Are we talking about fiscal stimulus as well, George?
Fiscal stimulus is one of the most important upcoming legislative attempts.
All right. And what about international headlines, George? What about trade wars with China? What about news of lockdowns in Europe? Do any of those affect your outlook?
They all affect outlook, but gold eventually will answer as a barometer, as a price barometer of our well-being as we start to see more inflation, and more inflation with low rates is going to be a propellant for gold on the upside.
Finally, let's talk about central bank buying. This year, in 2020, very few central banks, for the exception of Turkey and maybe a few others, but very few central banks have been buying gold in the same level that they have the previous year. Now, some people have said that this is because central banks are very price sensitive, and so once you see gold rising to $2,000 an ounce, they're likely to scale back their purchases. Do you agree with that analysis, or is there another reason?
No, I agree with that analysis, and I believe central bank buying of gold is more related to shoring up currencies that each individual central bank manages.
Okay. And do you think that central banks would likely pick up their purchases of gold in the coming years? Would there be any fundamental changes in our monetary system, I'm talking more long term, that would necessitate more central bank purchases of gold?
Well, I can't read tea leaves, but I'll tell you that gold will be a continuing important asset allocation for anybody that wants to keep their purchasing power intact. The more debts we have and the lower currencies go, the more people lose purchasing power, and they are seeing the effects of that already.
How much of their portfolio should an investor allocate into gold, percentage-wise?
I've been talking about 10 to 15%.
Finally, let's talk about the IPMI. I know you're a member where you were involved with the IPMI. Can you tell us about your involvement and maybe give us a little bit of a history of the organization?
Well, the IPMI is, I have to tell you, a full range of benefits. They have a precious metals newsletter. They have an annual members directory that has over 600 important addresses. They have a buyer's guide for precious metals. And then we have seminars. Some seminars are held in Europe. Some seminars are held in the Far East. And these seminars have to do with AML. It has to do with marketing. It has to do with legislation. It has to do with IPMI student awards, which are very important, where we give scholarships to students who study metallurgy very seriously. We have a Petroleum Refiners Council, an analytical council, a security council, and we have a number of internal committees like environmental and regulatory affairs, ERAC, and that's one of the most important after the AML, which is run by Mike Reese. And then, of course, we have financial committees just as well. And we are the premier, largest international representative of the metals industry.
Very good, George. George, I want to thank you so much for coming on the show today with your thoughts. I appreciate it. Thank you very much.
Thank you for having me. It was a pleasure. I hope to see you soon.
Pleasure. I hope to speak to you again soon as well. Thank you for watching Kitco News. We'll have much more coverage for the IPMI conference. I'm David Lynn. Stay tuned.